Renowned Tesla investor and prospective fund managing partner, Gary Black, has made a bold forecast that is causing a stir in the financial sector. He thinks Tesla is about to see a big 7x growth spurt, which would change the game for the industry and present investors with a unique opportunity. Are you excited to find out more about this fascinating prediction and how it might affect the market? Then let's get started. Sit back, unwind, and keep watching. Don't forget to hit the like and subscribe buttons. According to Gary Black, the price of Tesla shares might rise 7 times. Black is still upbeat in spite of Tesla's issues. Black claims that there is only one way for the price of Tesla's shares to rise. Gary Black discussed Ron Barron's forecast that the value of Tesla will reach $4.5 trillion. According to Ron Barron, Tesla will make $4.5 trillion in 10 years. He believes that the company will sell 20 million cars at a profit margin of 30%. His estimate is based on $300 billion in operational income, which is multiplied by 15 times the operating margin to arrive at a total of $4.5 trillion. When Barron first made his estimate in November, he said on CNBC that if Tesla's valuation hits $4.5 trillion, it will represent a 570% rise from its current 2014 worth. When Barron made his first investment in Tesla, his 4% ownership was valued at $4 billion. According to the investor's prediction, the company's valuation would reach $4.5 trillion in 8 to 10 years, and each share will be priced between $500 and $600 in 2025. On Tesla's Q3 2022 earnings call, Elon Musk suggested that the firm might even be larger than Apple and Saudi Aramco. Investors agreed, with over $4 trillion invested in Tesla. In his bullish prediction, Barron anticipates 10 years of sustained growth for Tesla and 20 million yearly vehicle sales. Elon Musk, the CEO of Tesla, is expected to build 20 million cars by 2030. If he sold 20 million cars at $50,000 each by 2030, he would have made $300 billion in earnings and $1 trillion in sales. $4.5 trillion is the result of increasing Barron's reported operational profit of $300 billion by 50. The investor draws attention to the fact that the optimistic scenario outweighs Tesla's revenue and that Tesla's profitable autonomous vehicle project is safe. Musk predicted that Tesla's valuation would surpass that of Apple and Saudi Aramco combined. But he forgot to mention the human component of robots, he believes. Investments include robots and batteries, but not robots themselves. He anticipates that robots will be more important than cars, which is why Tesla is working on so many different projects at once. The robot will result in an increase in the price of Tesla's stock. Ron Barron's and Gary Black's predictions for Tesla were essentially the same. In accordance with our parents' projection, Tesla's valuation will reach $4.5 trillion by 2030, even if we arrived at that figure on our own. In addition to the worries expressed by most Tesla investors, Tesla's EVS is expected to generate a stock market value of $42 per share, assuming a market cap of $30 billion, a PE of 30, and a compound annual growth rate of 15 for earnings per share. At $12.60 per share, this translates to a total market cap of $4.5 trillion. And rising number of individual Tesla investors are worried that the electric vehicle company could suffer as a result of their mandatory Twitter involvement. Gary Black, who is in charge of the $50 million worth of Tesla shares held by his fund Future Fund LLC, had a difficult weekend on Twitter this past weekend after criticizing people for sharing their pronouns without permission, attacking the company's former head of trust and safety, and covering the arrest of top U.S. government medical advisor Anthony Fauci. Warren Buffett claims that the market behaves like a voting machine in the short run, but like a weighing machine in the long run. This will improve the Tesla brand in the long run and bring Elon Musk to power. Hiromichi Mizuno, a board member and a longtime Tesla investor, and Martin Vita, their director of investor relations, despite Musk leaving to take a position as CEO of another firm. Roz Gerber posted his concerns to Tesla's board of directors about who is currently in charge of the company's day-to-day operations. Gerber stated that Tesla is performing well, citing the company's profit from Elon Musk's ambitions and the necessity for a committed CEO. The corporation was headed for its worst year ever after the Tesla stock price fell by 54.31 in December. But the price of the stock has since recovered. Elon Musk's purchase of Twitter during a 30% decline in Tesla stock has left investors nervous for months. The stock price of Tesla continued to fall after investors began to worry about inflation and a recession. In addition, Tesla slowed down the rate at which cars were shipped after Twitter was acquired in late October. Many individuals urged the CEO to back out of the deal and focus on the electric vehicle manufacturer. After Tesla's stock fell by 28% in December, Musk stated on December 13 that while he couldn't control macroeconomic trends, Tesla would be fantastic in the long run. He continued, "I'll make sure Tesla shareholders receive long-term benefits from Twitter." Something had been mentioned regarding those plans. Elon Musk made his dissolution of shareholders known the week before when he revealed that he was still working on SpaceX and Tesla. Previously, Musk had tweeted on a July weekend that he was still in charge of SpaceX's test line, but that the team there was so good that he would frequently not be needed by 2030. A 30x multiple for Tesla's predicted EPS of $100 corresponds to a 15% growth in earnings between 2030 and 2035. In 2030, a price of $3,600 would yield earnings of $1,400. Prior to the stock market crash in August, Tesla shares were valued at $232 apiece, which makes logical given EB, the price of the company's stock, is close to what it was previously, albeit far lower than the $232 mark in July. In recent months, it has traded above $200. Black feels that the corporation should buy back part of its shares since he thinks Tesla's price is undervalued. Dark path to the Tesla board of directors suggested use of some of the company's growing wealth, according to bull and institutional investor Gary Black. The company's cash reserves have increased and its price-to-earnings ratio is at its lowest point, making this the ideal time for a buyback. He recommends repurchasing Tesla stock because when a business does this, it essentially creates another buyer in the market. In any case, Black suggested a buyback after 3 years. Black stated that the corporation can easily afford a $10 billion buyback because of the $18.9 billion in cash and the $100 billion in free cash will expect to be generated by earnings over the next 3 years, all capital expenditures, which might reach $35 billion for the new gigabit internet connections, Optimus Dojo robotaxis, and other. Black speculates that Tesla's board will decide to implement a $10 billion share buyback program, with a sum of $5 billion being used to buy Musk's shares immediately. This would benefit Musk's finance of Twitter and reduce the overhang on Tesla shares, and purchases share prices would rise if Twitter were left to its own devices. The company's electric vehicles have become widely recognized and popular, establishing Tesla as a dominant player in the market. This, along with the growing demand for sustainable energy solutions, Black sent an open letter describing his plan to the directors of Tesla, which the company supported. He continued by saying that he had faith in Tesla's business, Tesla's goods, and Tesla's management, adding that Tesla is the largest investment in his future fund. This concludes our conversation for today, but because you probably want to hear more, click the like button. Get in touch, check out our previous videos, and I'll see you in our upcoming video.